Everyone, it's Arash Adnani from privateplacements.com. Joining me today is an absolute legend, the godfather of gold, the creator of the gold royalty business model, co-founder of Franco-Nevada, $38 billion market cap company, former president of Newmont, former chair of the World Gold Council, Mr. Pierre Lassonde. Pierre, thanks for joining me.
Arash, thank you so much. We're going to have a good time.
Yes, sir. So, Pierre, I know you've probably started this many interviews you've done with the topic of inflation. You must be getting tired of it. I'm getting tired of it. But we must know, how does this thing end? Is it going to get ugly, or is there such thing as a soft landing here?
There's no soft landing. The scenario that we're living through is very similar to me to what I lived through in the 1970s. And what the Fed will find out is the Fed doesn't control inflation. Inflation is a multi-component beast, if you want to call it. And it starts with maybe oil price going up because energy has a huge impact on cost of living. But then it goes through every single component of our daily life. And more importantly, I talk about compensation, salaries. You look at what COVID has done, and COVID has raised the stake for the blue collar worker that were earning $9 an hour, and we call them our saviors. And then all of a sudden they're saying, well, if we're that important to you, why are we getting paid $9 an hour? Now we want like 16 or 18 or $20 an hour. And more importantly, a lot of people change their lifestyle. We have 4 million people quitting their job every month. Why? Because they don't want to go back to the job that they had, and they were not compensated for it. So the manifestation of inflation is going to be very, very deep and structural and longer term. So we're looking very much again like the 1970s. The early inflation was 71 with the oil shock in 73. 74, the Fed raised interest rate, engineered a recession. They said, oh, we made a mistake. And then, of course, 76 to 1980, 81, inflation went up from 2-3% to 10, 11, 12% per year. And interest rates went up with it, and the gold price went up as well, and the dollar went up. I mean, they all went up, in lockstep. But inflation was deeply embedded. And it was not until interest rate hit 15% that finally, and a very brutal recession in 81, 82, that finally inflation got tame. And we're a long way from that, a long, long way.
So in the meantime, as you said, the comparisons to what happened in the 70s and through to the 80s, as an investor, and our audience here, we have a lot of do-it-yourself investors, so people that are managing their own money and people that are learning by watching channels like this. If we're trying to look at this and we're trying to be smart about how we play the next year, 2 years, 3 years, I mean, you can't really think too much farther down the road than that. Is the smart move right now to sell and go to cash, or you look at some of these, let's say, cheaper commodities? Like, I think gold right now, the gold stocks at least, there's some good buys out there. There's some developers, there's some more kind of producers that you can pick up at a discount even to a year ago. What would you say is the right play for investors and how they should look at the market right now?
Arash, this is my 6 or 7 cycle. Okay, so I can't really get excited anymore by the lows and the ups and the downs. They happen, and we'll maybe hit another low, and then we'll hit another high. And the point here, to be all in cash, if you're so prescient to be able to, predict like when the low will be and when the high will be, good on you. I've been at it for 40 years and I still can't do it. Mm-hmm. Okay, so I don't try to time the market. I don't try to beat the market. What I really do is pick investment, pick stocks, companies, really. I mean, I don't pick stocks. I pick companies. I pick management team that I believe are undervalued, and more importantly, that offer enormous amount of optionality. Because where you make your money in the mining business and the oil and gas business is optionality. That is, 80% of the value of the value creation of a mining company comes with the drill bit. Okay, and the drill bit is what gives you optionality. So if you can buy an asset today for $1 that is worth $2, and on top of that you get optionality, that's where you can really make a big score in or you can make sound investment. So what I always try to do is look for investment where the stocks are, the stocks trade. They can be overvalued, they can be undervalued. The value of the company is fixed. That's a fixed number, okay? But the value in the market, sometimes the market ignores the company and they trade at half their value, and sometimes they're way overvalued. And you have to understand, you have to know what is the value that you're buying. And are you buying, something for 50 cents on a dollar, or you're overpaying? Because if you're overpaying, you're not likely to get over it, and you're going to probably lose money.
How do you understand the value? So if you were to explain, especially with mining, to our audience, how you would value these companies. And obviously there's the project itself and the asset, but there's also a lot of the intangibles like the people and the jurisdiction. How do you factor all that in?
It's not an easy, I guess, process, but what I like to do is I like to look at companies that already have proven mineable reserve with a 43-101 number. Okay, so those reserves are real, they're there. Okay, so let's say a company has 1 million ounce of 43-101 reserve. Well, those reserve, if you look at the average company out there, are worth, let's say, $100 an ounce in the ground. Well, the company should be worth about 1 billion Canadian. If the company trades at 500 million, that's 50 cents on the dollar. If it trades for 250, that's 25 cents on the dollar. But if it trades at, like a 2 billion market cap, you got to say, okay, what do they know that I don't know? Okay, like, do they think that this thing's going to double? And now you are already prepaying for the optionality, which is not what I like to do. I don't want to prepay. I want to have it for free, because that's how you make money. I want to be able to buy into something for 50 cents on the dollar that maybe could be worth $2 with, more drilling, for example. So that's really how you make money. And I developed a graph called the Lassonde Curve back when I wrote my book, the gold book, in the 1990s. And it's a very easy way to understand the cycle of a mining company stock. Okay, like, you got the penny stock that trades for 10, 20, 30 cents. And there are 1,000 of those companies, and they raise a bit of money. And a lot of them are what I call lifestyle company, where the management has been there for 20 years, and they just raise enough money to pay themselves and go do a bit of exploration, but they don't really create value for shareholders. There's some that raise money, they go drill, they do put money in the ground, and they find nothing. And then I did an analysis of 3,000 companies that were junior companies. Only about 1% of them ever become mines. Okay, so you're not, like, those are not where you're not likely to make a lot of money doing those. But if there's a discovery, the stock, like, they take off and they can go like 5, 10, 20 times. And then there's a lot of blue sky that gets built into the stock price, meaning that people think, oh, it's going to get bigger, it's going to get bigger and bigger. And then they pay and they overpay. And then finally, they have to come out with a resource. And then reality starts to set in. And then the stock price rolls over. And then they have to do a 43-101 for a reserve. And then, like, ooh, reality comes even more. And then we have to raise capital. Oh, that hurts. Okay. And that's usually the bottom of the curve. Okay. Like, that is, to my mind, the best hunting ground, is where companies have fully disclosed their reserve, fully disclosed their capex. You know exactly the share structure. You know how they're going to finance the mine. And that's where you have the maximum leverage, because usually the stock will trade at, anywhere from 30 cents to 40, 50 cents on the dollar. And then they start construction. And by the time construction is like half to 2/3 completed, then the market says like, oh, but we're way behind the curve. And then the stock starts to go up, and you have realization. And then the company, now that they have money and income, they start drilling, they increase reserve, and then you get that optionality for free that I'm talking about. So good example of that would be Lundin Gold, which came at public 4 years ago at about 4.15. I remember buying 5% of the company at the time, because I thought this is a great project, and they were hiring Louis Gignac, G Mining, to build a mine, the most believable and best mine construction team in the world. They said it's going to cost $675 million. They raised the money. The stock did nothing for 3 years. And then 3 months before production, the stock went from $4.50 to $12. And that's what happens. And now they're drilling different prospects, and who knows what the value could be down the road, but you're getting all of that for free. And in the meantime, you tripled your money. But you have to have patience. You cannot go in there and think that it's going to happen overnight. It's just like you buy it, you know what you're getting, the value is there, you just be patient, it's going to happen, and you are going to make money.
Okay, so we've obviously, if we didn't invest alongside you in Lundin Gold, we missed the boat on that one. But I know you look at a lot of different deals. Are there some deals that are a little bit earlier on in that part of the curve, in that dip, where the stock becomes a little bit unloved, but it's de-risked and everything looks good? What are some companies that you like right now that you're invested in, that you're supporting, that you can share with us?
Well, another good example where I have put a serious amount of money is Prime Mining in Mexico. Back 2 years ago, the company had a whole market value, about 54 million Canadian, yet they had a 43-101 with 750,000 ounces of gold in an open pit. And so you do the math and you say, well, gee, how could that be worth only $50 million? Makes no sense. And it had really great optionality. So we went to see the company. We did the private placement. We love the management, people that have been around, a long time. They're proven mine builders, they're proven company builders. And we have done 2 further rounds of private placement. The company this year is doing 50,000 meters of drilling. And you look at the results that they're coming up with, and obviously the resource is going to be a multiple of what they had originally. And I'm very, very encouraged by, and it's high grade stuff, which is what I really like, is that, nothing beats great in the mining business. So that's a perfect example where it was a bit earlier, and it was totally unloved and ignored. And yet there was a real asset with real value and with great optionality.
And so trading at around the 320 right now. So this still seems unloved, and maybe in that same kind of category as Lundin Gold, as you mentioned.
Yeah, well, I got to tell you, last week I bought another 750,000 shares at 365. So I look a bit stupid today. It's 325, but that's just to tell you the value that I think it's worth. And today it's on sale. I mean, what can I do? Market goes up, market goes down, nothing I can do. I'll probably be in the market again to buy more.
And do you think this has the same potential as the Lundin Gold as far as how the stock price can grow?
Very much so. Very much so. You again, here you have to look at the analysts who follow the company, and they do put the numbers together, and they kind of give you, a bit of a preview of where this is going. But I think that when it's all said and done, you're looking at probably a resource in the 2 to 3 million ounce of gold, and the anywhere from 70 to 100 million ounce of silver at very high grade, and like that is going to be worth north of $1 billion. I guarantee you that.
Excellent. So that's definitely one to watch.
It is very much so.
Pierre, you mentioned you've come in on a couple of private placements on Prime Mining. As you know, the name of this channel is privateplacements.com. We are firm believers in private placement investing. We also realize that it's not always guaranteed. There's a lot of deals that don't turn out the way you think they will. For yourself, as someone who's very experienced in the private placement market, both as an issuer, raising money through private placements, and as an investor, first of all, I'm just making the assumption that you're still actively investing in private placements, correct?
That's correct.
And so when you're investing in private placements, if it's a new deal, so it's a new company you're looking at and you're going to be investing for the first time, what do you look for? What are some ways that you try to kind of create a framework as far as how you should look at the deal and its potential? Optionality is one.
Yeah, frankly, management is my number one criteria, is like who is running the company and how much faith do I have in the people? Because at the end of the day, you make money with people. Good people make good things happen. And good people will find good projects. They will run them properly. They will talk to the market. They will make it happen. And but the other thing that I will say is that I've learned another lesson, I guess, over the years, is that I don't spread myself thin with 10, 20 different companies or whatever. I limit myself to essentially about 5 companies. And I dig very deep in those companies. I know the management. I've worked with them, or, I understand who they are, where they're coming from. I look at their past, what they've accomplished. And I go a lot from that. And a good example is ATEX, which is a copper, a very junior copper company in Chile. Well, the chairman and the president, Craig Nelson and Raymond Janis, are 2 individuals that I worked with 25 years ago when we created Metallica, and then it became New Gold. And these people are, proven. Raymond has found some of the greatest ore bodies. He's a proven geologist. He's done it before. Craig has, got a great track record. And they came to see me and said, we got this project in Chile, and we need, $7 million. And here's what it looks like. This is what we think it is. And even though it was very, very early, which is against my religion, okay? I don't normally do early stage project, but because of the people, because of the quality of the information that was there, we said, okay, we'll support you, knowing that possibly I would lose my entire investment. Okay, this is not something that I do very often, but because of the people, I was willing to do it. And I must admit, when you have a drill hole of 1.2 kilometers with 0.77% copper, you got to think that there's going to be more over there. And that was the whole premise. And today they have one drill hole that's almost 2 kilometers that I understand is in mineralization. So I think that this could be, and we'll have the result in June, but it could be one of the really significant copper discovery of this decade.
That's ATEX Resources, ticker symbol ATX.
That is correct.
So speaking of copper, I know in a past interview with Kitco, you're big on copper. Can you give us kind of the thesis for copper and why you're bullish on copper right now?
Yeah, it's very simple, actually. And it has to do with the greening of the world. Today, essentially 75% of what we call terminal energy is carbon. It comes from carbon, oil and gas in particular. So when you drive your car, you fly a plane, all the natural gas you use to heat your home, everything else, that's what we call terminal energy. And 25% is electricity. If we want to go to a green world, you have to flip that around. You have to have 75% electricity and no more than 25% carbon. And to do that, the only way you're going to do 75% terminal electricity is with copper. It's very simple. Everything runs on copper. Without copper, we have no civilization the way you know it today. Okay, take your laptop, take all your communication, take all your transportation. You have no cars, no trucks, nothing. You have no elevators, no air conditioning. All of that takes copper. And you're going to need 2 to 3 times as much copper in the next 20 to 40 years as you do now. And we don't have the mines. They don't exist. First, you got to find them, and then you got to permit them. You have any idea how long it takes to permit today, like those giant copper mines? You're looking at 12 years. So the price of copper over the next 5-10 years, to my mind, is going to be under severe pressure on the upside, simply because we've got to find these deposits and try to put them into production. And you don't build a 100,000 ton a day copper mine in 18 months, okay? Like the whole permitting, engineering, construction, it takes like 10 to 15 years. So I'm very bullish on copper. To my mind, it's the #1 commodity to be in. And I'm also very bullish on gold because of what I see in the world today in terms of inflation. All the other commodities are sort of second fiddle, okay? When you talk about uranium, for example, will the world really go to nuclear power plants? There's a big debate. It's not been settled. And there are a lot of countries like Germany who are still moving away from nuclear. And they still think that there's no way in the world they could put that in front of their people. Japan has, shut down 24 of their nuclear plants. They're trying to bring them back, but there's still a huge debate as to what's going to happen to uranium. So for me, I'm just on the sideline. You know what? I don't know. I can't predict. So I'm on the sideline. Same with the batteries. Okay, batteries is a way to have electricity for cars and for other things, but I'm not sure that the current battery technology is good enough for the next 20 years. And there's a lot of money, billions and billions being spent on battery technology. It's evolving very rapidly. But the current lithium, nickel, lithium, cobalt, lithium battery, they're already at 95% loading capacity. And I'm not sure that they're just that good enough. So again, when I look at lithium and I look at, all these other metals, am I really keen to get in there? And, in the short term, maybe. I think you have a 2 to 5 year time span where they are going to have a good time. But longer term, not so sure. Copper, 100%.
With regards to copper, so you have ATX. Are there other copper companies that you like?
Well, again, on the copper side, the world is dominated by the really big giant companies such as Freeport and, of course, First Quantum, with whom Franco-Nevada partnered to build the Cobre Panama mine in Panama, which is one of the great. It's the 6th largest copper gold mine in the world, and it's been a tremendous success. But it's 6.6 billion, and don't think it was done tomorrow. Cobre Panama was found, get this, in 1966. Okay, 1966.
Yeah.
And there's another deposit in Panama called Cerro Colorado, was found the same year. It's still in the wild of Panama, and there's no talk of putting that in production. And it is one of the best undeveloped copper deposits of the world. and it's sitting out there. And if, as and when they start to permit this thing and to build it, you're looking at minimum 10 to 15 years.
I want to come back to what you were talking about with people, and we hear this a lot. So the concept of investing in good people and good management teams, it's a common trend, and it makes total sense. But it almost seems too simple. I think people hear it and they're like, okay, but it's got to be more complicated than that. So all I do is just follow the good people, and then what? So a few questions. Number one, so good people, one way to identify good people is by previous success track record. Okay. Now, the downside to that is that if you're investing in someone with good track record, you're also paying a premium. A lot of people say, you know what? It's worth it. Do you agree? Do you think the built-in premium for some of the good names, it just gives you peace of mind at night that you know they're out there, they're doing the work, they're doing it the right way?
What I like to do is I like to look at what price the management team paid for their shares.
Okay.
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 I don't like to be a sucker. Okay. I don't like someone who comes to me, I got the greatest thing in the world. I paid 10 cents, but for you, I'll give you a deal at $1. Okay. That's called a promo. Okay. A promotion. And I was not born on this earth to be promoted. Okay. Not going to happen with me. Now, to be fair, if a management team has gone out there, worked for like 2-3 years, found a project, and they want like a 2-time promo on it,
right?
Or maybe 3, fine. I could take that. But I'm not in for like they go in at 5 cents and you're coming in at $2. Forget that.
Right, and the 5 cents was just 2 months ago, for example.
Yeah.
Okay.
That is a very sensible thing to do, is just say, what's your cost? What did you invest in? And what have you done to, revalue this company to the price where you're trying to get me in?
Yeah, I guess that is the right question. But a lot of people just might not have that access to find out about these deals early on, or the leverage, let's say, like someone like yourself would have. So for the everyday investor, other than asking about, okay, well, what's your cost? Because I think that's really important as well. What are some other good things that your everyday investor can look for as a way to grade the management team? And by the way, I think that what you mentioned about you need to put in work, and you need to maybe do less deals, but just know more about each deal. How much of that can be allocated towards understanding the management team? So understanding their cost. What other things could people look for that they think could be factors in identifying A+ teams?
You, as an investor, I want to be in the same shoes as management. And I want a management team that is heavily invested in the company so that if they make a ton of money, I make money.
Is there a rule of thumb of how much ownership you want to see?
Normally I would say I want to see anywhere from 5 to 10% ownership by management.
Mm-hmm.
And sometimes more. Okay. But what I want a team that is committed to the shareholders and not to themselves. I want a team that, I hate companies where management makes millions and millions and the shareholders make no money.
Mm-hmm.
Okay. And because management owns no stock, they take everything in cash and RSUs and options and warrants, and they have all the hoopla. They go to the party on your money, but you're outside the party watching it. Okay, like that. That's not my style.
Mm-hmm. Okay, so what are there? So people's important. Okay, and you're looking at deals. I'm sure people are pitching you a lot. what other things do you look for? Is the obviously the commodities important?
Yeah.
You like copper, you like gold. Do you ever go outside of mining, Pierre?
Very, very rarely. I know my field of competence, and I stick with it. Now, I'm one of the major shareholder in a technology company, but that's because of my
Right.
first wife who started the company, and I ended up with it. And I'm not a seller, okay? Like to me, I'm like Warren Buffett. My favorite holding period is forever. Okay, that's really how you make the big monies. You find a great management team with a great business, and you just stay there. And Franco-Nevada, I still have some of my 10-cent stock. Okay, it's like $200. Okay, like I never sell. All right, and that's how you make money.
Pierre,
And
I gotta ask you something. How did you guys come up with the idea for the gold royalty model? Like, were you guys sitting around somewhere? How did it come up?
I was writing the first Franco-Nevada annual report, and we doing some drilling in Nevada, and of course, like finding nothing, like most junior do. And I remember walking in my partner's office and saying to Seymour, I said, "Look, I'm writing the annual report to the shareholders, and I'm telling them that we're losing their money, and we're the two biggest schmuck because we're the two largest shareholders. So, like, there's got to be a better way to be in this business." And so we started to kind of kibitz around, like like what else could we do? And he came from the oil and gas business. Seymour is an oil and gas guy, and then at one point in the conversation, he just threw on the table, well, in the oil and gas business, there are royalties. Like, are there any in the mining business? And I was like, well, I've heard of a few, but I don't even know like who owns them and how you would go about it. And we kept talking about it, and we said, well, let's see if we could buy one or two, so at least we'd get cash flow, and we wouldn't have to raise money all the time and dilute ourselves, keep diluting ourselves, because the bane of junior mining company is dilution. Okay,
Mhm.
like company starts as Moose Pasture Incorporated, and then it's Consolidated Moose Pasture Incorporated, and then it's Worldwide Consolidated Moose Pasture, and then so they go through like 2, 3, 4 different consolidation, and the shareholders like lose everything. And so that's where the idea started from. And then I told our geologists out west, I said, like, if you ever see a royalty coming up for sale, let us know. We would be interested. And as God would have it, and luck, okay, one Friday morning, he was reading the Reno Gazette in his office, okay, sipping coffee. And on page 3, there was a box ad, 2-inch by 3-inch, in big letters, royalty for sale, with a phone number.
Oh my God.
And he called it up. It was a phone number in Houston, Texas. He called it up. The guy said, yeah, I got a royalty. Where is it? It's in the Carlin Trend. Okay. And well, send me all the stuff. And anyway, it turned out to be the Gold Strike royalty. Yeah. Yeah.
That's incredible.
It is. It is. Yep. And I bought it. I told the guy, meet me Monday morning in Salt Lake City. I went there, and then we negotiated a price, $2 million. That royalty has cash flowed over $1 billion so far.
That's incredible. What
It
an
is.
origin story.
Yep.
Like
And
literally
it's
sitting there, just scratching your head after trying to write the letter, and then
Arash, it's all about optionality. Okay, we were buying optionality big time, and we've done it. Like, I've done it 3 times where we bought something for 2 million worth $1 billion.
do you? So you're obviously a huge shareholder at Franco-Nevada still. Do you buy any of the other royalty companies?
No, I'm pretty happy with the Franco-Nevada business model, which I think is superior to the other companies, because what we have, again, when I talk about optionality, we have, because we've been in business for like 35 years, the number of royalties that we have, we have over 10 million acres of land under essentially under royalty and then option. And that is what gives you the optionality value. And the other companies, their model is not the same, and they don't have that optionality that we do. They have to keep buying and buying and buying. Franco doesn't. Just let me give you a very quick summary why this is so. When we came back public in 2008, we had 10 million ounce. We had 20 million ounce of reserves and 30 million ounce of resource to the royalty to Franco-Nevada. 10 years later, all those ounces have been mined. 20 million ounces have been mined. We got the cash flow. We paid $1 billion of dividend. And guess what the reserves are? 20 million ounce of reserve and 30 million ounce of resource without Franco-Nevada spending one penny.
Mm-hmm.
Why? Optionality. The mining companies kept drilling. They found more. And, we have the same. And that is the power of the business model of Franco, but it's only because we have so many properties. If you only got one, your optionality is very, very narrow. That's why I think the Franco business model is the better business model.
Excellent. The merchant bank work that you do, which is mostly investing in these companies. How I know you said you like to stay disciplined. Okay, so let's say 5 or 6 companies, gold, copper, uranium. You're staying on the sideline. Okay,
yep.
But we can't ignore the fact that it's a hot market and there's money to be made. If you're, let's say, making room for a new commodity in the portfolio, what's it going to take for you? Again, does it come down to just identifying a deal that you like the structure of and you like the people in?
It would be all about the quality of the ore body and also location. I mean, Seymour and I used to say, we'll go anywhere where they speak English, they have an English code of law, and where we can ski and play poker.
Mm-hmm.
Okay?
Well, that's...
Yeah, okay.
Okay.
Well, because, you can end up in countries where you get nationalized. If you find something that's too good, they nationalize it or they tax you to death.
Mm-hmm.
I've seen it when I was running Newmont. We had a deal in Uzbekistan, and we got taxed out of Uzbekistan. We ended up in the court of the World Court, and we got 130 million, and they said goodbye. They stole the mine from us. What can I tell you? Okay, it happens all the time. So jurisdiction, I like the north-south. I like, anywhere in the Americas. Mm-hmm. Not everywhere in the Americas. There are places that we wouldn't go. But if I was sitting in London, I would look at anything in Africa if you want, or that. But I don't think I would go everywhere in Africa. I mean, I'm not sure that I've got the heart to go to the Congo, but Mr. Friedland is happy to go to the Congo. Okay, mm-hmm. It depends on your own, risk profile.
Agreed. So even somewhere like Chile, where you have, from a political standpoint, maybe there's change in a more left-leaning president. Things like that don't bother you as much about investing in projects in Chile?
Well, I take comfort in Chile that the biggest copper company is a national company. Okay, so the people running the national copper company, I'm sure that they're being listened to at the political level, because they're the ones who are giving billions and billions to the government in payback. Okay. Right. And so they are the voice of reason behind, I believe, what will develop in Chile. Okay. Chile they are the largest copper producer in the world. And I'm sure that the people running, the company are able to say to the government, well, if you do this, this is what's going to happen. And we're on your side because we're a national mining company. We're like, a state company. But so I take a lot of comfort with that.
Pierre, I want to leave off on maybe what's most important here, and something that you've really committed to for most of your life, and I know you encourage others to do so as well, which is the philanthropy work that you've done. The list of honors and awards and recognitions, we could do a whole interview to talk about it. I wanted to ask you, out of everything, which one means the most to you? Which one are you most proud of, and why?
Oh, that's an easy answer, because of all the philanthropic endeavors that I've done, the Lassonde Entrepreneur Institute at the University of Utah is by far, to me, the most rewarding. I started this about 20 years ago, actually, next week. And
Congratulations.
They wanted $5 million. And I said, well, what about $50,000 for the first year? And you show me what you can do for me. Another of my precept is, when you don't know what you're doing, do it short term and do it small. So if you make a mistake, it's not going to kill you. You'll learn something, and then you try again. And so that's how we started. But the fact is that 20 years later, the Institute is now in the top 10 in the United States, right along with MIT and all the other entrepreneur institutes. So I am very, very proud of what we've accomplished. And we keep coming up with new ideas. We've now developed an MBC. So you have an MBA, but we now can give you an MBC, a Master of Business Creation. And we take entrepreneurs who already have a revenue, and we step them up to their next level. And we help them, with accounting. We help them to understand marketing. We help them to understand the purpose of their business. And we're having enormous success. And we're going to bring this program online. And anybody in the world will be able to get an MBC from the University of Utah. So, and we're going to keep the costs low so we can reach, a huge amount of entrepreneurs. So this is fantastic, absolutely fantastic.
What advice do you have for entrepreneurs? So either ones that are thinking about starting something and doing something and building something, and you as a builder, that's really important to me, because there's a lot of entrepreneurs, but I think being a builder is different. Yeah, I mean, what advice do you have? I know it's a very kind of generic question, but
if you want to build a small company, you build it with families and friends, and you raise money, 100,000, family and friend. If you want to build a bigger company, you have to raise $1 million. You need a bigger network. If you want to build a big company, you have to have a big network. You have to be able to talk to people all over Canada, all over the world, and create a support system where you're going to have essentially billions of dollars available for you to grow your company. So you start small, and you learn what makes a good company. You learn from your mistake, and you keep growing it. And that's what we did at Franco-Nevada. I mean, we started with $2 million, and today it's a 30 billion plus company. And we started with essentially friends who put money in the early Franco-Nevada, and then we enlarged our network. And we ended up in Europe. We got a great support system in Europe. And, that's how you grow. It's all about, at the end, a lot of it has to do with your network of people. You have to build a really strong network around you.
What do you think is the best way of doing that?
You meet people personally. You have to, even in this day and age of Zoom and whatnot, there's nothing like, having lunch and breakfast with 4 or 5 people, and you put your, ideas across, and you connect with people. And good year, bad year, I always made 2 trips to Europe, and always talked to the shareholders, and always told them exactly what's happening so they know. And even if the stock was down like 5, 10, 20%, okay, this is what we're doing, they know. And they stay with you. The biggest plus of building Franco-Nevada is that we had incredibly strong shareholders who stayed with us, like Fidelity in Boston. I mean, through thick and thins, they own like anywhere from 10 to 15% of our company, you know, because they had confidence in what we were doing. They had trust in management, and that trust is so important.
Pierre, I want to thank you. This was such a great conversation, and we touched on so many things. You're an absolute legend, and it's a real honor to have you on here. And we look forward to hopefully doing a follow-up some point down the road. Thanks very much.
Ash, it's been a pleasure, my friend. Thank you so much.
Thank you.